The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, welcome on this last day of October. That candle right there, that's the monthly candle. That's what we're waiting to see. How does it close? Does it close above the 9-period moving average at 20, exactly where it is right now, 25,100? Does it close under it? Does it get close to the 24,417 14-period moving average? Does it push up so that it creates something very much like this Chapman wave Roman candle right here from February? All right, well, we'll see. The day's young. Talking about time frames, look, this is what I love to look at here. You see, this is the same thing. Instead of the daily, the weekly, and the monthly, we've got a 2-minute E-mini, we've got a 5-minute, and we've got a 10-minute. Probably the relationship should be more 2-minute to about a 10-minute, and then about a 30-minute, but it doesn't matter. The relationship is still the same where you're getting larger or longer time frames. And in the E-mini, make it real clear that by 3 o'clock this afternoon, if the E-mini, which is at 27.10, having made a high today of 27.29.25, if the E-mini is below 27.05, it means that it's probably on its way to the 200-period moving average in the 5-minute chart in the next day or so. That's at 2,700. If it really has a good rally towards the end of the day, last hour or so of trading, we've seen that at the end of the month. Remember, I spoke about it for the last couple of days. I said, it's in my memory, it's June that I remember seeing the second day to the end of the month. Is the third day before was still really very ugly. And then the second day, there was a really strong reversal. And then the end of the month day, the chart, in fact, in some cases, it made a new recovery high. I don't think that's the case here under any circumstances. But I do want to say that anything can happen in the last couple of hours because you don't know what the fund managers have been doing for the past couple of weeks. Have they been lightening up? And now they're seeing that the prices that they were looking at are kind of in the levels that they were hoping that it would be. And it is, and they have to do something, or they're saying, "Oh my goodness, if this market keeps coming down, I want to lock in my gains for the year. This is not good," and they'll get out. So we don't know. Anything can happen in the last hour. All right, nitty gritties. Here we go. Oh, and thank you to those subscribers and to those who are testing out my newsletter who came to my webinar last night. I know there are a lot of people that said that the 5 o'clock time, Eastern time, was a little difficult because they're working or they were just busy, and they'll get there. The webinar should be up right now, noon. I was told that it should be up on the front page of TFNN for you, for anyone. If you want, there is still, this was very specific to the candle that we're looking at in monthly charts, what the implications are for this year going to early next year, where we should be and what levels to watch, the kind of patterns that I'm looking at. But I was also very nitty-gritty in this very short term going into next week, what we're looking for and why we're looking for that. So it's absolutely appropriate. There is no real time limit on this because we are just starting to put in a couple of long positions when we can. I'm still looking at reshorting some of the positions that we already have to get back into them. We've taken nice profits. And the question was, wait a minute, if you think we're still going to 23,300, surely every big rally should be a shorting opportunity. And the answer is when you get as oversold, and I'm going to show you right. In fact, let me just do this. I did this last night. It was really fun to do. I'm going to do it right now. Look, in the daily chart of the Dow, using the Chapman wave projections, look how much support we had. I showed this last night. We had 3 levels of support: 24,370, 24,147, and 23,911. Those red lines, those red numbers, Look at those ones when they were there. Look at that, hit the 200-period moving average. Look at that huge rally that started back in early July. Look at this when we had 2 and the cluster of 3. We've had some real nice rallies. I did not want to dismiss the fact that even though we've plunged under the 200-period moving average, we couldn't have a rally, and that rally could go into Thursday or Friday. But I suspect that going in by Friday afternoon, going into Monday and Tuesday, I suspect there'll be some kind of hesitancy here unless something spectacular happens in the market. Yeah, that's the Dow. I haven't looked at this lately. Let me just look at the S&P. S&P, right? Calculating analysis. Well, there it is. Also, 2640, 2588, 2556. And what was the low yesterday? 3 days ago, there's a daily chart, 2603. So right in there, we've got the support levels. Now we write, and I say to subscribers, I don't think the S&P or the SPY will get back to the 200-period moving average in a hurry, but that would be a target of reconsidering shorting in the general market. Look at the QQQs trading right now, and I meant to say the Dow went to 24,122. So in that particular instance, yep, those levels were exactly where you would expect. Support here, this is the QQQ. I didn't mention the Dow is up 258. It had been up a lot more. It's at 25,133. S&P was up 30, it went to the 2718s, so it's at 2712 right now, up 29. The QQQ, the NDX 100 trading vehicle, is up 3.15, up 1.90%. The Dow's up 0.99, S&P's up 1.08. You can see the Qs have had a nice rebound at 169.12 right now, and you can see all this resistance. Yep, the MACD is trying to turn around, stochastic's trying to turn around. This, I think, is a bounce. Where it goes to and when we start on the H pattern on the way down, I don't know, but you've got to release some of this incredible energy that was building up on the short side, and now you've just got to have a break to go to the upside. The IWM is trading right now at up 0.81. Had a good candle yesterday, and today it's only up 0.64% at 150.69. It is really struggling. What happened there? I didn't touch anything. It came back again. Oh, here's the IWM up 0.95 at 150.68. That's what it is. Nice doji candle there. So, yep, and the MACD is about to turn up. So I'm looking at it, and the histogram's improving. I think if there wasn't the midterms coming up on Tuesday, I would have put a lot more effort into buying and holding. We did buy 3 days ago. It was 1 day early. And I thought, okay, I don't want to get too carried away on the long side, where my bias is that I still think at some point with a monthly chart the way it is, that we will go down to the 23,300 level. All right. So as I'm looking at this now, let's get out of this. It's enough already. I want to just go back to my regular charts. So you can see the IWM has gone to a leg B, hit the 9-period moving average, went right through it, gapped up, and it's now touching the 14-period moving average of 152.15. It went right to 151.86 this morning. Now it's down to 150.65. It's really struggling. I'll be back. We'll talk about all these other indices. And what I want you to say is you can still go to the front page of TFNN and sign up for my service for a month, and you'll get.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
So as I'm looking at these different charts, let me just go back to my main chart right here. Look at the IWM. Let's just take a moment here. You see the decline from 86, that was back in 2011, it's a monthly chart, the Russell 2000, goes from the 34.26 low in March of 2009, rallies up to 86, pulls back to 60. That's a 26 point. That's a huge percentage loss. That's about 28%, I'm thinking. And then it goes from 60.09 in a series that has a Chapman Wave instance restart. Remember, D is what we looked for. It made the peak D right there at 86. And that was back in about May of 2011. Pulls back to 60.9 and starts a trend line. And this trend line, the dash trend line, you can see where it goes to. It hasn't been broken yet because it would continue. And my eye says it would come out at about 139, right? That's the one trend line. But there's a green trend line that starts, and that trend line goes to the highs that were made at about 120 back in 2013, 14. Slightly higher highs, starts the Chapman Wave inside track. And then it goes to the bottom, the dashed red line, to 129.10 back in June of 2015. So it goes from 60, doubles, to 129. Then it pulls back to 93, 30 points, another really big pullback, 30% something. And on February 2016, it starts off at 93.64 and it continues with the Chapman Wave instant restart and goes all the way. Doesn't use the restart because what does it do? It goes to a G/C. I'm pretty sure at the end of the day, I'm going to call this a G. I'm absolutely 100% sure I'm going to call it a G. And look at that red bar. Now look at the decline. 1, 2, 3, 4, 5 months back in 2011. Then it comes down and breaks this trend line for the first time with a slide in February of 2016, right? Look at that. Look at that. 1, 2, 3, 4, 5, 6, 7, 8. 8-month decline. The MACD turned down. The stochastic turned down. MACD turned down each time, right? with the stochastic going under 80%. The stochastic's at 85%, and the MACD, as it closes, if it closes here right now, is down. It's just on below the 0% line. That says to me you've got time. Maybe not price yet, but you absolutely got time, because in 1 month you've gone from 173 to 144.70. So that's 30 points on a $17 stock. Let's say 30, so it's 317. Yeah, so what have you got there? You got well over 22% decline. And now what we're looking at is the MACD is only just now turning down. So maybe the MACD will flatten out, so it needs time to turn around and go back positive. So that means that regardless of however I look at this, the iShares, the Russell 2000, now you've got a rising trend line. The old one, I'll just expand this for the purpose of argument right now. To the right, extend to the right. There we go. Yeah, and that's what I say. Oh, 39, no, it goes to 140. So it goes to 140 if it's this month. It's 141 if it goes to next month. But we've already pierced this particular one right here. And not only pierced it, we smashed through it. So this one now becomes very important. Let's make it green to say that if it gets there, that could be another buying opportunity, just for fun. Well, cyan, we'll make it a cyan color, all right? So that's what I'm looking at. And that's just one thing. Now, I just need to do this for a second. I'm going to finish up with the gold and all the rest. Yeah, gold was down a little bit earlier on. Now it's down a little more. It's down 8 at 12.16, made a peak G. Now, this is the classic way that I'm doing it. I'm just merely extending the letters because the MACD continued rallying. So it goes to a G, and then it pulls back very sharply with a high in the continuous contract of 1246. Round number 1246. It's trading now down $24 at 12.16. Well, if that's the case, then look at the weekly chart. The weekly chart is still not bad. It's not great, but it's just not bad. And then what do we see? We see silver. Silver coming back a little bit now, maybe not the same. Oh, it's 1.22% now. Now it's extended. And I'd say this peak E is not good. You need to see silver in the in the 15.20s. And that's not happening. This is a down arrow, double top, but not good. And it's trading at 14.285. Now, this weekly chart doesn't look good at all. High-grade copper. High-grade copper is trading down 0.01, made a peak C1, C2 in the daily, and its weekly chart also is not looking good. Commodities are struggling. So the dollar. Let's go to the dollar, our long dollar. Dollar is trading right now. Earlier on, it made a new recovery, a recovery high. Why am I not getting dollar? I think the dollar is afraid to show its face. There it is. It's down 6 at 0.06 at 96.93. It went to 97.19 today. That 97.19 in leg D in a cup formation. I spent some time on it last night teaching the waveform, Chapman wave methodology, teaching the different techniques. Twice we've had a Chapman wave inside wedge target line hit, and that hit exactly, and it stalled right at that dashed green line. I think you can see it. Yes, you can just see it. And you went above the 96.98 level. We have not closed above 96.98 as far as I can tell. Close yesterday was 96.98. We haven't closed above it. To me, what's really important is the cup formation. It's just fabulous. Yeah, in the den, beautiful left side, right side price time match, LS, RS. Here's your plumb line right at the bottom. And it took one extra day to break above the 96.98 level. That's today. So it's done its job. But wait a minute, the MACD is still rising. The histogram is still improving, and the stochastic's at 88%. That says, hey, wait a minute, 96.45 to 96.21 are moving average support levels. So why don't you go to the weekly chart? Because that's going to be important, because you've done everything you needed to do in the Chapman wave stalk leg formation. You've had the cup formation success. You've had one bar late. It turns out to be 1 day in the daily chart, but it's late by 1 bar. In the weekly chart, this is the bar that's actually making the high, and it's got the Chapman wave inside wedge target line. And it's gone to a leg B in the monthly. And today's the end of the month. That means there's a chance. There's just, I don't know if it's going to work. There's a chance by the end of the day that we're either really close or we actually on a monthly basis close above the high bar of August with a high of 96.98. We're at 96.98 right now. I'd love to see 96.99 to conclude that October was a recovery high in a leg B with a close above the previous left side high. That's just a start because, you know, my rule of thumb with a cup formation, I want to see two closes, very nice closes above the left side lip that was the previous cup formation. And I want to see it 2 out of 3 bars. In this case, it's monthly bars. That takes us into 2019. Oh my God, 2019. The Dow is up 281. S&P is up 34. We'll be right back. Let me just glance at the E-mini. Yep, got a nice little bounce coming up here. Leg B, leg C. Okay, I'll be right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So we're looking at the euro-dollar currency pair. The euro is down at 1.131. That H pattern, we spent a lot of time last time looking at the H pattern and discussing what would happen if some of the H pattern, the left side low, was taken out and what we would expect from it. So just make it real simple. In the euro-dollar currency pair, trading at 1.13149, down 0.002, if it was on a weekly basis, to close below 1.13010, and it's already gone to 1.13050. It's real close. If it closes decisively under that, it starts leg C to the downside, as the dollar is going to leg B on the upside, as the USD JPY, which very often tracks in the direction but not the same proportion, only just off in the direction of the dollar. Let's see where it is right now. Yep, it's down 0.16 at 112.19, and it's had a pretty decent rally. This is actually a brand new A, because that's A to B minus, and that's an A if we're starting off fresh. Yeah, so as I'm looking at it at this particular point, it's holding, and you remember what I said, that the weekly chart said that the 200-period moving average is way down to 109, but it's the 14-period moving average in the weekly at about 112 that is really important. A close below 112, no, let me make it, a close below 111.60 would be very negative, and so far it's running quite nicely within a trading range in the upper side. So this is actually quite good action for the yen. All right. Let's go to the TLT. We're covering everything we can right now because it's been a very important month, October. So the TLT is down 30 cents at 113.86, stuck in this range, nearly close to breaking to the downside. And that tells me, and we spent a little time last night, I was looking at different chart formations. The TNX, the 10-year, this is the monthly. Look at this monthly chart right here. I wanted to mention to my subscribers and the people, and to the new people that signed up for last night's webinar, put into context where we are at 3.140% in the 10-year yield, 31.40. We're only where we were back into December of 2013. We're only where we were back in 2011, 2010, 2009. If there's nothing here that should be bothering the market, what is bothering the market is that the trend has been from July of 2016, where it was at 13.6. It has doubled, almost doubled, and is on the way up. And that's what's scary. As I see it, I think that when the next phase of the selling comes into the market, and I believe it should come in, I'm not saying how deep, I'm saying this rotational selling that just goes through the different sectors. It's just way too soon for an Amazon. Let me get to that in a moment. I was going to say it's way too soon for some of these stocks that have just started their decline after years of moving up to just correct and then move to all-time highs. I just don't think I'm going to see that for a little while. All right. Meantime, back at the ranch, what we're looking at is there's this beautiful left side, right side cup formation, and it took out, the right side took out within 5 months earlier than it should, the match between the December high of 30.36 of 2013, the low of July of 2016 at 13 point, I'm missing a number here, 13.36, I thought I was missing a 3 there, 13.36, and the way up. And now we've gone to a new recovery high. And I just made it real clear. If there is a push in the 10-year yield, the TNX, above 30, I would say above a new high from where it has been in October. In other words, above 32.48, even by 1 penny, that 33.23 200-period exponential moving average becomes a magnet. It's an attractor. So that's really the issue. The issue is the direction. It's not the price. We've been here so many times. Yields on this is still nothing for those of you who back in the 80s were looking at 90s, were looking at mortgages that were certainly the 80s that were up in the 16, 17% area. Ho hum, 5%, 6%. We managed, except the prices of houses now, I think, are proportionately to wages are way out of sight. This is my impression. Well, we saw that last night when I showed you the price ratio of housing to affordability. It just doesn't work anymore. So it's not good. Okay, enough with that. So I wanted to show that. That's the TLT. I just wanted to quickly TLT you. TLT says, the monthly chart, lowercase h, breaking down below 116, trading now in the 113s. Not a good sign at this particular point. Something fantastic has to happen for the TLT to really scream into the 116s again. It's trading at 113.84. That's the Lehman 20-year Treasury Bond Fund. Crude oil, and then we're done, and we've got tons of questions. Crude oil right now is up a little bit. Yeah, it's up 4 cents. No big deal. There's a little mini H. Look, and it broke down below the left side low, testing the 200. The longer you hang around the 200-period moving average, it's like treacle, especially since this is Halloween. We can talk about that. It's like a sticky substance, like those fingers. It just doesn't come away from those fingers. All right, and the MACDs are really lousy, and the stochastics at 14% and flat. Not good. Look at the weekly chart. It just says crude oil should hang around this level for a while. Even if it pops up to the 68s, it should come back and retest the 65s, 200-period moving average. Even if it goes lower, it should try to test and come back to the magnet. Sticky. This is what's the story with the honey? Anyway, all right. So I think we covered a chunk of things. Now let's go to the questions. We'll go to Boeing because it is important, but I think Boeing has a problem. Boeing right now is up 7. It's had a real nice spring back from just under 330, trading at 36. No, it hit. What was the high? Yeah, 363. It hit 363.40, trading now 357. This is just a relief rally, but it doesn't mean to say it has to break down. There's a lot of support in Boeing because fundamentally there are numbers that are good. So I don't see it. I see it in a bearish phase, not a bear phase. Daily bear phase. Weekly is just saying, you know what? Sell signal could go to a sell mode at the end of the week. Let's watch it closely. That monthly chart is still holding pretty okay. I hope that answers the question. XLP, I mentioned it last night. We didn't do anything about it because it's gone to a leg C. On a shorter term basis, I'm looking at the XLP, which is the S&P Select. The full title is S&P Select Consumer Staples Spider Fund. And look, it's gone to a C. It is under the major high of 59-ish, the all-time high back in January of this year. It plummeted to 48. I would say that that's a pretty big pullback. And then it's had a good rally, a 2/3 rally. And now it's kind of, I think it's in a mid-range. But I want to focus on the XLP in the next pullback that we get in the general market. When that occurs, I don't think it's going to occur just yet, but when it does, I want to talk about that in a moment. What about next week is the question, and I'll talk about it. Please, someone remind me. I'll be right back. Basil Chapman, Tiger Technicians Hour, Dow's up 295, S&P's up.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Cash index last night. My cash index is not really an index. I call it an index. That's Cintas, Amazon, Spy, and Home Depot. If my reading of this is correct, together with Stanley Black & Decker, go through all those different areas that are really consumer-related areas, we're in a mini recession. And that mini recession should show up somewhere, somehow, this year. And the XLP is saying, wait a minute, we're okay. We're the defensive area. So stock-wise, the prices are moving okay, but it hasn't gone to the all-time high. It is at a decent level at 55. So it's on my watch list for my subscribers. When we get into it, I'm not sure, but it's on my watch list as a defensive area that you can go to. But what about the XRT? The XRT is the Spider S&P retail. It had a real nice candle yesterday. And today it's down sharply, 47.39, down 43 cents. Peak E, this is a little bit like the XLP in a sense because it's consumer related. It has companies that are very important in the area of retail buying, let's say. That's not a good candle for the monthly. The RTH, which had a better candle, going to the top. And even now has only had 1 month down. The other ones had 2 months down. I'm looking at this and I'm saying, is that a win? I'm looking at it and I'm saying, did I miss something here? Look, 111.82 and 112. I thought I missed that. Good eye. Thank you. That's a peak E in the weekly, and that's a sell mode. So we've got the daily in a sell mode, the weekly in a sell mode, in the RTH, the Market Vectors Retail Index. The monthly hasn't even given a sell signal yet. So I got to watch these closely. It's a good sign that it hasn't. And as I say, you can't do anything yet in terms of the monthly close because we've still got over 4 hours to go. Anything can happen in 4 hours. The fund managers can really whoosh. They can do buying now so that it looks good, or they could do selling. And there's no real clue right now because maybe some people have a clue. I don't have a clue in the sense that there's an indicator that I use. The only indicator that I have is that the monthly candle has to be looked at when the month is closed. The weekly candle when the week is closed, and the daily at 4 o'clock today because that's when it closes, together with the monthly. All right, so the RTH, just watching it closely. The technicals are lousy in the daily. It could have a bounce, but I'm just thinking bounce. Question about IYR. IYR is the U.S. REITs. This is the commercial commercial area of real estate. So iShares Dow Jones US RE index trading at 78.70 IYR. You know, it had this is one of the most unusual monthly chart patterns. I think I've spent a lot of time talking about this. It did everything it had to. If I wasn't thinking of it as a monthly candle, if I look at the weekly candle, it went from a trough at 71.25 to a high in the 83s, a peak E, and then it's pulled back under the 200-period moving average. All I can say is that this candle right here is going to be a clue, because next month, if there is any week that it closes under 77, we're probably going to test the low of this month in the 74.50s and 75.15 area. So let's just keep that in mind. And if there's a big move to the upside, that's going to be very impressive. That'll be saying, yep, this is an area that gives you dividends. People are not so afraid of real estate if it's in select areas, and a dividend-paying income is really what you want to be looking at. All right, next thing we're going to look at is, so IYR parameters, it's at 79 above 80.60. That's good action, and below 76 is not good action. And I would just say to you, on a closing basis, the next 1.5 up or 1.5 down is going to be important. Next question I had is the XLB. Now, this is interesting because last time in the webinar, I said, you know, I was looking earlier at the home builders, and the home builders had tested serious, this is now the Select Materials Spider XLB, trading at 52.68, up 78 cents, up 1.5%. Just hitting right now the 14-period moving average, having not even touched the 9-period moving average since back in early October, touched it for 2 days, and now the third day breaks to the upside, touching the 14-period. I like this action in the short term. I also looked at ITB, the one that I mentioned last time, the one I was thinking, you know, we might do a little nibbling in. Then I looked and I thought, wait a minute, U.S. home construction? Why would I be wanting to touch that when rates are rallying? The home builders have been just terrible. Even if it's a bounce, it could just be a brief little thing and then come right before you know it, overnight it could tank. So we had nothing to do with it. Another reason is it went to a leg D to the downside with a pretty decent candle last week, below the 200-period moving average in the weekly, and then it made a lower low this week. Even though it's a nice candle right now, it made a lower low. I don't like that. Yeah, kind of engulfing. Tough. I just didn't want to touch it. All right, the next question I had is EWG. Is that Germany? It must be. EWG is Germany. This is the iShares. Yeah, it's 27.27. Let me show you something even more important. Look, DEDOW. This is the Dow. It's the same. You'll see it's the same chart pattern as the DAX, but it's a little bit. It gives me more information, and it's at a different price. It's the Dow Jones Germany stock index. And it's trading. Look at that monthly chart. That is not a good chart. And the MACD, nothing's turning up. Stochastic's trying to turn in the weekly chart, but you've got resistance at 384 and it's at 376. Yeah, this could be a nice bounce. I'm even going to draw in the two fighting patterns. You always have the two fighting patterns. There's the cup. If we give it an extra little time, we can go all the way to the left side right there back in early October. And then the fighting pattern is that, yeah, it tries to make an arch formation. It can get to 384. It's at 376, can go up another 4 or 5 points. And then I think it tries to come back and do a retest of just to find its strength. Okay, so that's that. I did just about XLI. I don't think I did XLI yesterday. I didn't like it. I said the XLI that's the true industrials. And that's the reason when I get a question about saying, so if we are out of a lot of positions, I'm still anticipating that there are a lot of people out there that have your own portfolios, and you have our newsletters for guidance, and you have particular stocks, and you have particular techniques, which one of us, maybe a couple of the hosts on TFNN, you just like their work and you want to study the methodology. So I'm saying, I didn't tell everybody to get out of everything. I said, lighten up. I've been saying that for weeks. Lighten up. There's going to be a really good buying opportunity. I still say that. Lighten up because it's going to be a good buying opportunity. In the short term, there are things to trade. We've got a stock we've got pre-market at a price we wanted, just got it in time, and it's up real nicely today. We missed the sector, the index that we wanted to go along. I actually don't mind, but there's certain stocks we just want to start our positions here because they have the potential to have really good gains and then maybe come back and maybe just barely test the recent lows. I don't know. We'll be back. Basil Chapman, Tiger Technicians Hour. Dow's up 309, S&P's up 38. We'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. So let me just do a couple of things. Look, the semis are really important. And they have been smacked from the 114 level way down to the 86s. Yep, a little bit of a bounce coming in here. We've taken some very nice gains on the way down, our short position. We still have a little bit left, and I'm just going to try to keep that as long as we can because I'd like to add to it at some point. I just got an email from someone saying, article below shows Samsung's view of the market and its cutbacks on CapEx. Other than Intel, I'm hearing the same thing from almost all semi companies. Could be a lull for a little while. So that's, I've been talking about that without knowing anything about the semiconductor industry just by the chart pattern from March. So now I think we're starting to build some kind of a base in these companies, and one by one you might find that they sell off somewhat, but you might find that the bulk of the move down, we don't know, could be done, and now it's trying to form a base, but maybe slightly lower lows will come, we don't know. But I am looking at it and I'm saying that was quite a move down. So it's a clue. The IWM, it's a clue. And all I'm saying is that we remain short the Dow. We're trying to trade positions for these swings, which will create, in a bear market, vicious upside spikes occur. And then it just starts to fade and come back again. Does it go back to the low of a few days ago? That's the big question. I have a way to look at it, and tomorrow is a chance that we can do it. I don't want to do it now. We don't have time. I'll talk a little bit more about what I'm anticipating for next week. Meantime, back at the ranch, you've got Steve Rose. He'll give you his opinion. You've got Dave White. He'll give you his opinion. And, of course, Tom O'Brien at the end of the day. And I'll be back tomorrow. So stay tuned. The Dow is acting very well at this particular point. I didn't speak about the VIX because the VIX is a very special thing. I want to see where it closes today. If it goes back into the teens by Friday, not Thursday, but Friday, if it closes in the teens, that's going to give us a real good clue as to what happens coming Monday and Tuesday. I think the market is anticipating not the same old, but an adjustment that isn't that great from Wednesday. Famous last words. We'll see what happens here. Meantime, back at the ranch, have a great day, and I'll see you tomorrow. Go to the front page of TFNN. My webinar should be up for those who would like to get my subscription for the next month, and it's money back guarantee. I'll be back tomorrow. Have a great day. I'll be back tomorrow early, in fact, at 8 o'clock.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.